Bitcoin correlates very well with tech stocks, which is not surprising. At the end of the day, cryptocurrencies are a form of fintech. So when you see the Mag 7 come down, it's not shocking to me to see Bitcoin come down. If that sell-off, if NVIDIA disappoints tomorrow,
oh boy.
I think you see Bitcoin going down further. But it gets me back to our Treasury point earlier. President Trump, in one of his executive orders, is very explicitly supporting the development of digital assets and crypto, and specifically stablecoin. And I want to highlight this because to the degree stablecoins gather momentum, gather assets, they're backed by, the dollar ones are backed by treasuries and other cash-like assets. This is a source of demand for treasuries that I think Treasury Secretary Bessent is keeping a close eye on. Tether, just has something like $113 billion worth of treasury and treasury-like securities today.
Rebecca, is this administration, I mean, I think President Trump at some point, whether it's campaign or whatever, described himself as a crypto president. Is this a crypto presidency? Is this something where the next 4 years we can see the U.S. regulatory framework support crypto in this country?
100%. I think over the next 6-12 months, we will see regulatory clarity, which is going to allow more integration between crypto assets and the traditional banking system. And I think it probably will get more broad adoption. So it won't just be the young men. It will be more types of investors. And that's good for crypto in that it'll reduce volatility by having more liquidity. The risk one needs to watch is that as it gets bigger and more integrated, it becomes a source of systemic risk. If you have a hack like we did this past week in Bybit, right? $1.5 billion hack of a cold wallet, which is supposed to be safe.
Cold wallet.
Right, a cold wallet is offline.
That's Dad's wallet after the trip to Sephora.
But if that happened in the United States, we would have contagion. And that, it's not just going to be Silicon Valley Bank. It would be broader. So that's the thing one needs to watch out for. You can have regulation to give them the ability to grow and innovate. You still have to have a few consumer guardrails there.
Our listeners and viewers know where I am on this, and I think Ms. Patterson knows where I am on this. So let's cut to the chase. First thing I did this morning is from peak to where we are now, BitDog is down 20%. That's not a currency. We've got all sorts of IRA, ETF, Eric Balchunas, BlackRock, this, that, and the other doing it. What should we say to those people if we pop down another 10%? I mean, horrific bear markets in the equity market are negative 35%. If we get that in Bitcoin, and we're now letting everybody have Bitcoin, what's going to be the outcome?
Well, again, my concern, I think to the degree digital assets encourage more financial innovation in the United States, that's great, right? Our financial system is creative and broad and deep, and that helps the U.S. economy. What we need to be mindful of is that the pool of people today, not in the future, but today, who are trading Bitcoin and these currencies aren't necessarily aware of how to save for retirement in a safe, methodical way. This is not an easy path to retirement riches. And if they lose their money, they have less ability to buy a home, to invest for the longer term. So understanding the volatility of what they're buying, that's, I hope that these crypto companies do a lot more education going forward to help these people invest in these assets wisely. Right now, I don't see a lot of evidence of that.
The regulatory environment, in the last administration, the Biden administration, Gary Gensler, I expected him, and I think a lot of people did, that A, he understood crypto, and B, he was going to take a forceful hand in kind of pushing the regulatory framework forward, which most participants are asking for.
Yes.
Yet he did not really. What do we know about this administration, the Trump administration?
Well, in the last administration, there was some debate, fight, whatever word you want to use, between the different regulatory agencies on who would be the lead on digital assets. I think in this administration, we're likely to see a lighter touch, probably led by the CFTC, rather than the SEC. I think we'll get some legislation from Congress through probably in the next few months, which will also create a clear path And these companies need it. They deserve it, right? They need to know the rules of the road, and the banks and other asset managers need to know the rules of the road. So I do think this administration is going to be incredibly helpful on that front. Again, my hope and my ask, if I could be there in the White House today, would be, please don't forget some consumer protection, some consumer guardrails.
Do you have in your head a price of Bitcoin south where everybody starts wringing their hands? I mean, we're at 89,000. Is it 80? Is it 50? I mean, I have no idea.
So my worst case scenario, a realistic worst case scenario, would be that we get some disappointment out of one of the big tech companies, NVIDIA, whoever it is, it doesn't matter. And we get more of a concerted sell-off. Maybe in response to tariffs, China put some holds on U.S. tech companies acting in China, those sorts of maneuvers. You get a bigger sell-off in tech, which is not impossible given valuations, given ownership, and that contagion pulls down cryptocurrencies in a meaningful way, because these investors own crypto and they own meme stocks and they own a lot of tech. And so they get hit on both fronts. That could get some momentum and pull down the broader market. I don't know if anyone buys that dip, because they just need to be covering their losses at that point.